program where we give you updates on the financial capital markets and, of course, the economy. It has been a busy week so far. We just want to give you a recap of some activities happening in the market and even review of some key developments that occurred to the previous week. But let's first begin with the latest news we have now, and that is that the Consumer Price Index, which measures inflation in the country, increased by 12.40% year-on-year in May 2020. That's the latest economic data coming from National Bureau of Statistics. It showed that 0.06% points was high than the rate recorded in April 2020, which was 12.34%. Increases were recorded in all of the divisions that yielded the headline index. On month-on-month basis, the headline index increased by 1.17% in May 2020. This is 0.15% rate higher than the rate recorded in April 2020, which was 1.02%. The percentage change in the average composite consumer price index for the 12-month period ending May 2020 over the average of the CPI for the previous 12-month period was 11.79%, showing 0.08% point from 11.71% recorded in April 2020. The urban inflation rate increased by 13.03% year-on-year in May 2020 from 13.01% recorded in April 2020, while the rural inflation rate increased by 11.83% in May 2020 from 11.73% in April 2020. On a month-on-month basis, the urban index rose by 1.18% in May 2020, up by 0.12 points from 1.06% recorded in April 2020, while the rural index also rose by 1.16% in May 2020, up by 0.18 points from the rates recorded in April 2020. The corresponding 12-month year-on-year average percentage change for the urban index was 12.36% in May 2020. This is higher than the 12.26% reported in April 2020, while the corresponding rural inflation rate in May 2020 was 11.26% compared to 11.20% recorded in April 2020. Looking at the food index, the composite food index rose by 15.04% year-on-year in May 2020 compared to 15.03% in April 2020. This rise in the food index was caused by increases in prices of bread and cereals, potatoes, yam and other tubers, oils and fats, fruits, fish and meats. On a month-on-month basis, the food sub-index increased by 1.42% in May 2020, up by 0.24% points from 1.18% recorded in April 2020. The average annual rate of change of the food sub-index for the 12-month period ending May 2020 over the previous 12-month average was 14.33%, 0.11 points from the average annual rate of change recorded in April 2020, which was 14.22%. In terms of all items less farm produce report, the all items less farm produce of core inflation, which excludes the price of volatile agriculture produce, stood at 10.12% in May 2020, up by 0.14% when compared with 9.98% recorded in April 2020. On month-on-month basis, the core sub-index increased by 0.88% in May 2020. This was down by 0.05% when compared with 0.93% recorded in April 2020. The highest increases were recorded in prices of pharmaceutical products, medical services, repair of furniture, hospital services, passenger transport by road, motor cars, bicycles. And then in terms of maintenance and repair of personal transport equipment, passenger transport by sea and inland waterways, paramedical services, motorcycles and hairdressing salons, and personal grooming establishments incurred the cost. The average 12-month annual rate of change of the index was 9.27% for the 12-month period ending May 2020. This is 0.1 percentage points higher than 9.17% recorded in April 2020. Let's take a look at state profiles for the May 2020 CPI report. In analyzing price movements under this section, note that the CPI is weighed by consumption expenditure patterns which differ across states. Accordingly, the weight assigned to a particular food or non-food item may differ from state to state, making interstate comparisons of consumption basket inadvisable and potentially misleading. In terms of the all items inflation in May 2020, all items inflation on the year-on-year basis was highest in Rivers State, 14.69%, Bauchi, 14.91%, and Ebonyi, Kogi, and Plateau, who all recorded 13.87%. Benue, 11.13%, Adamawa, 11.10%, and Kwara, 10.58% recorded the slowest rise in the headline year-on-year inflation. On month-on-month basis, however, May 2020 all items inflation was highest in Bayelsa, 2.33%, Delta, 2.03%, and Ebonyi, 2%, while Oyo State, 0.48%, Akwa Ibom, 0.47%, and Zamfara, 0.35% recorded the slowest rise in headline month-on-month inflation. Food inflation in May 2020 on a year-on-year basis was highest in Abuja, 18.13%, Osun State, 17.40%, and Imo, 17.13%. Abia, 13.46%, Bauchi, 12.97%, and Kaduna, 12.97% recorded the slowest rise in food inflation. On month-on-month basis, however, May 2020 food inflation was highest in Ebonyi, 3.43%, Bayelsa, 3.21%, and Edo, 2.74%, while Zamfara, 0.22%, Abia, 0.21% recorded the slowest rise, with Akwa Ibom recording price deflation or negative inflation, general decrease in the general price level of food, or a negative food inflation rate. Now let's look at the Economics report, which has been ongoing and has over 10 editions now. The latest edition looks at the Africa stock markets, and it showed that 34 African stock markets year-to-date performance played up the mirror image of global equity market patterns. Among the 34 stock markets examined in the 29 stock markets were negative. That is, they dipped, while 5 stock markets were positive in the green zone, which recorded positive changes. The stock markets with the highest gain in their year-to-date performance are Egypt's GX 70, Kenya's FTSE Asia Pan-African Index, and Rwanda's RSE ASI, with positive changes of 60.35%, 60.27%, and 21.71% respectively, while the top African stock markets that recorded losses are South Africa's Financial 15, Egypt's EGX 20, CAPED, and Egypt's EGX 30, which dipped by minus 36.16%, minus 32.66%, and minus 30.02% respectively. At a recent UN Global Compact webinar hosted by the Nigerian Stock Exchange, the Executive Director of Regulations, Ms. Tinwadewe, said the approach of the exchange was to corporate sustainability is focused on 4 key pillars covering marketplace, workplace, community, and environment. She said the NSE is promoting collaborative efforts across the ecosystem to jointly drive towards the attainment of the Sustainable Development Goals, which will be timelined to 2030. According to her, COVID-19 presents an opportunity to review the NSE approach to SDGs and build on the corporate sustainability efforts within the business and ecosystem. She said in growing the green bond markets, the NSE signed an MOU with the Luxembourg Stock Exchange to cooperate in promoting cross-listings and trading of green bonds in Nigeria and Luxembourg. Tinwadewe further stated that the partnership has already yielded its first fruit with the successful cross-listing of the Access Bank 15 billion naira, which is about $41.7 million, green bond on the exchange and Luxembourg Stock Exchange. And still speaking on the market activities, we'll look up at the developments on the market. 100 billion naira 5-year series, 12.50% fixed rate series 1 senior unsecured bonds due by 2025 under the 300 billion naira debt issuance program of the Dangote Cement PLC was listed on Monday, June 15, 2020 on the Nigerian Stock Exchange. The bonds have already been 100% subscribed, showing you the value of the Dangote brand. Also, activities are really happening in the bonds market. Stanbic IBTC Capital Limited and Standard Chartered Capital and Advisory Nigeria Limited were delighted to inform the market of the upcoming Series 1 and Series 2 commercial paper issuance under the Guinness Nigeria PLC, the company which is the issuer, of a 10 billion naira commercial issuance program. Guinness Nigeria began operations in 1963 when the company opened its first plant in Lagos, which also represented the first Guinness brewery outside of Ireland and Great Britain. Since then, the company has expanded operations with breweries strategically located in Benin and Lagos states to enable efficient delivery across Nigeria Guinness breweries and making them amongst the most modern and technologically driven breweries in Africa. While Guinness Nigeria primarily engages in brewing, packaging, marketing, and selling spirits, beers, ready-to-drink products, and non-alcoholic drinks in Nigeria, it also engages in exports of its products to other countries. The company's portfolio includes iconic brands and market leaders such as the flagship brands Guinness Foreign Extra Stout, Malta Guinness Classic, Harp Lager Beer, Smirnoff Ice, Smirnoff Vodka, Dubic Malt, Origin Bitters, Origin Zero, Saturn Brow, Mr. Dowell, Johnny Walker, Singleton, Ciroc, Baileys, and Baileys Delight. Guinness Nigeria is a subsidiary of Diageo, a global leader in beverage alcohol with an outstanding collection of brands across spirits, beer, and wine categories, which are sold in over 180 countries around the world. The funds raised by the company will be used to fund short-term working capital requirements as well as for general corporate purposes. The issuer has been assigned an A+ and A1 long-term and short-term rating, respectively, by Global Credit Rating Company, reflecting the company's market-leading position within the brewery industry in Nigeria, with a well-diversified products portfolio of brands targeting different pricing points. In addition, the company benefits from a favorable cash conversion cycle that facilitates strong cash generation and liquidity. Let us take a look at the money market activity that happened for last week. And according to Oncoria, the system liquidity shrank due to the absence of inflow for the first 3 days last week. Hence, the money market rate was at double digits before the open market operation maturity of 92 billion naira came in on Thursday last week. Consequently, the average money market rate fell significantly to close the short week at 9.33% from 16.15% in the previous week. The open buy bank and overnight rates fell to 8.83% and 9.83% from 15.60% and 16.70% respectively, while the system liquidity closed the week at 160.23 billion. Oncoria expects that inflows from the OMO maturities worth 355.20 billion naira would boost the system liquidity this week. At the foreign exchange market, the Nigeria External Reserves halted its 3 weeks consecutive increase as the reverse fell by 0.21% to close the week at $36.48 billion. This was due to the CBN's intervention in the FX market and decline in the price of crude oil. Despite the decline, the naira appreciated to 285 naira 75 kobo to a dollar at the investors and export window. The CBN officials and parallel market rates remained unchanged to 361 naira to dollar and 450 naira to a dollar respectively. Oncoria expects pressure in the foreign exchange market to increase ahead of opening of airports from June 21st, 2020, all things being equal. At the bond market, the secondary sovereign bond market closed bearish last week as the average yield rose by 7 basis points to close at 10.08% compared to 10.02% in the previous week. The highest yield decline was witnessed in the January 2022 bond, which fell by 34 basis points to close at 5.56%, while the highest yield increase was witnessed by the April 2029 bond, which grew by 34 basis points to close at 10.96%. The Debt Management Office announced the results of the third sovereign 7-year Ijara Sukuk at 11.20%, for which it offered 150 billion naira to investors. The offer attracted a very high level of subscription from investors, with total subscription of 669.124 billion naira, representing a subscription level of over 446%. The DMO allotted 162.557 billion naira to investors. The impressive demand for the sukuk came from a wide range of investors, which included ethical funds, insurance companies, fund managers, and retail investors, amongst others. Oncoria expects more renewed interest in the bond market this week due to anticipated improvement in system liquidity. For treasury bills, the secondary market was relatively stable last week as yields closed at 3.39%. Similarly to the yield the previous week, this is due to low system liquidity, Conversely, the OMO bills fell by 10 basis points to close at 4.98% compared to 5.08% the previous week. The Debt Management Office rolled over a total of 90.94 billion naira at the National Treasury Bills primary auction held during the week. The office took advantage of the huge demand across the three tenors offered to cut top rates by an average of 49 basis points on the 91 and 182 days, while maintaining the rate on the 264 days paper. And at the global level, many bond and currency managers expect the U.S. Federal Reserve to adopt a policy of yield curve control as early as second quarter of 2020, according to a survey released by Russell Investments today. Bond market players are increasingly convinced that one of the Fed's next moves will be to cap yields at a specific point on the curve by buying 2- or 3- maturities, for example, to reinforce their guidance that interest rates are unlikely to rise soon. According to a fixed income survey by Russell Investments, 70% of 68 managers surveyed said they expect the Fed to engage in yield curve control starting as soon as the second quarter of 2020. 50% of those surveyed expect yield curve control for at least 3 years, while the consensus view among bond and currency managers was that the Fed was unlikely to cut rates into negative territory. In Europe, 70% of respondents said they expect peripheral Eurozone government bond yield spreads over German bonds to tighten over the next 12 months. In the UK, sterling was slightly weaker today after data showed inflation fell to its lowest level since June 2016 last month as the coronavirus pandemic sucked demand from the global economy and caused oil prices to tumble. Low inflation would give the Bank of England space to ramp up its stimulus program again when its policymakers meet tomorrow. The British Central Bank is expected to announce a fresh increase of at least £100 billion in its bond buying firepower. Sterling was last trading down 0.2% against the US dollar and the euro at $1.256 and 89.73 pence, respectively. The pound has risen more than 4% against the greenback in the last 3 months, but is still far off levels seen before the new coronavirus sent global markets tumbling in March. An interesting market activity previous week and this week, and you don't want to miss more of our market review conversations that continues tomorrow. That'll be all for the conversation today on the WebTV Market Review. You can follow our website, www.prochange.com. We'll give you incisive reports, analysis, and videos on what's happening in the economic, financial, and business space. Don't forget that we have a chronomics series, so when you log onto our website, you can read all our chronomics reports, and they are very incisive for you in this period. Till we come your way again, thank you for watching, have a nice day, and stay safe.